please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the first take is absolutely flat, 10,330, and the Sensex starts at 33,640, which is up about 10 points thereabouts. So very, very flat start. But the important point is that SGX Nifty was for some time indicating a little bit of a red. It's not a gung-ho start, but it's not a negative start either. Mid-caps are the ones where you're seeing a lot of action with 1/3% higher in terms of gains, which means the advanced declines is about 3 stocks in the green for 1 in the red at the opening bell. But Nifty Bank, Nifty and Sensex still very, very flat. What's doing well are all the oil refiners. One should expect that because we've seen a substantial cooling of crude prices. So HP, BP are up about 1.5% each. Hindalco continues with the gain, but it's the only metal stock which is up about 1%. The other steel guys are not there, nor is Vedanta. Titan is again up. That's because of the strong kind of statements coming from the company as well as the numbers. So 1.5% higher on Titan. Cipla up 1.2. That was also a little bit of unexpected lines. Yes Bank up 1.2. It's usually the beneficiary of bond yields falling, as is Indiabulls Housing, which is the other one that's gaining. So Bajaj Finance also among the gainers. SBI as well, Axis. So, I mean, largely Bank Nifty also not doing too badly. ICICI Bank is reeling with 1.5% in terms of losses. It's a little difficult to explain because all the negative noise is not really earnings related as much as management related. Then there's Bharti Airtel, which again on expected lines is down 1.3. Infosys, TCS, so all the tech stocks not doing too well. It's a strong rupee showing that also maybe chipping away a little ahead of earnings, a little bit of shaving off of prices is what you're seeing at this point in time. But otherwise, it's still flat as flat can get as far as the index is concerned. Not so flat for mid-caps.
Not so flat, but I don't know about the quality of mid-caps flying around this morning, Lata. A lot of indebted company stocks are up and about as if, you know, there's a quick resolution for everybody. So, I mean, from the Aloks of the world to IVRCL to, I mean, stocks like GVK, GMR, most of these stocks are on the upper side and actually gaining more ground. Electrosteel Steels, so that's the pocket that's moving higher. PSU banks, as we've been, of course, discussing the impact of the higher FPI limits. So generally speaking, all PSU banks are up and about, even the mid-rung and the smaller rung ones. Union Bank, Allahabad, of course, all these stocks on the upside as we are speaking. Do watch out for the JP group in particular because the creditors meeting is taking place today, and ahead of that, there's some excitement on a JP Infra. JP Associates is a little more quiet. And speaking of important meetings lined up ahead, again, as we've been talking about Dalmia Bharat, Binani, these are stocks in focus, and most of them are gaining ground. Binani, at least, is gaining ground. There was a small deal announcement by L&T Tech. $20 million is the value of the contract in year 1, so about 3% up. NBFCs are looking decent. So the likes of DHFL now gaining ground, Muthoot, Manappuram, Shriram Transport. Most of your NBFCs, as expected, have also started off on the positive side. So, Anuj, how do you rank things as of now?
A good opening, and you know the mid caps are opening higher, and you know this is what we discussed, Surabhi, that if you know things look quite okay, then you know for the mid caps rally you need markets may not rally a lot, but they should not fall. If they don't fall, then the mid caps can do well. I think the stock of the moment really is Jubilant FoodWorks. We were discussing this on Friday as well. I think the market is latching on to something here.
No, that 100 rupee pizza. I mean, you get a 200.
No,
exactly. It's not small. It's not small. It comes to the rank of McDonald's now.
I tell you something. I think the number doing the round on the street for the same store sales growth number on Jubilant FoodWorks this time is in 20s. You know. There was a time when, you know, when Jubilant went through that period where, of course, it went through that whole derating when the same-store sales growth had turned negative. Yeah. After that, they got that management change. Mr. Pradeep Hota, he came in, and after that, it's just been one-way journey. And this time, the market's talking about a number in the 20s. But anyway,
23%. I'm looking at a CLSA note right now.
CLSA note.
They're saying one because of course, the 100 rupee pizza and things like that. But I mean, even otherwise, other factors.
Exactly. Yeah. But anyway, Ashwini, your thoughts on market opening and any interesting stock idea?
See, ICICI Bank went down almost like 2%, and because of that, the Bank Nifty opened subdued, but the futures premium started to expand again, 80 points on Bank Nifty, 20-25 on the Nifty. I think ICICI Bank, that 2% will get vanished, and probably at some point it will get to unchanged. So that will propel the Bank Nifty higher. We have crossed Friday's high both on Nifty and Bank Nifty. I think from here you should be getting long on both these indices, and because Friday was a narrow range, we could have a fairly decent day on the upside.
Okay. Well, Hiren has been patiently waiting. But Hiren, why don't you chip in first on the banking stocks? I mean, ICICI's woes are not earnings related. Is this a good time to buy at least some corporate lenders?
Yeah, I mean, if you're a long-term investor and, you know, it's an institution. I mean, if you have an issue with a promoter-led company, then you can understand, but it's an institution, so, and a board-run institution at one. So if you have a long-term view, you know, obviously these kind of disruptions are an opportunity to buy. In fact, these banks were on the verge of re-rating because people saw that some of the NCLT cases were looking good in terms of the way they were getting resolved, the kind of you know, low haircuts or probably no haircuts that we are seeing in the first few cases would have actually been beneficial from a book value perspective. But I guess, you know, for the time being, it's the other news flow which has taken over in the short to medium term. So if you're a long-term investor and you can hold on to the, you know, near-term volatility because of what's happening right now, it's definitely an opportunity.
Okay. Well, then, before we thank you, I just wanted your thoughts on, you know, we have an earnings season coming up on Friday, of course, Infosys. Before that, IndusInd will also declare numbers. Your thoughts on the IT pack, because we've seen a big rally in most of the IT stocks.
It's seen a big rally, Anuj, but I think Infosys has corrected a bit over the last few days as well. So I don't know whether the market's going in entirely sanguine that the guidance for FY19 will be a very gung-ho one. I think we'll probably get that same 7 to 9% kind of a guidance for next year, which is not a blow the lights out kind of guidance, but in the current market milieu, people want to buy IT stocks. So Infosys might float around in a range. I don't see any great fireworks in the numbers. In fact, the whole sector is not exhibiting any fireworks. It's just got in some money because of other factors, which is the defensive nature of the sector. In terms of earnings, again, I don't see any major surprises in the Q4 earnings. We'll probably see, what, 5-6% growth in the Nifty earnings. We'll probably end the year with around 5-6% kind of an earnings growth for FY18, which will be quite disappointing. We'll have to see now. Every year, financial year or calendar year starts with a 20% plus expectation. That was the case in FY18. We are ending with 5%. And in FY19, again, the expectation is 24-25%. So I'm keeping my fingers crossed that it will be better next year than it has been. I was reading one brokerage report which suggested that it is the 7th year running that we're going to have single-digit earnings growth for the Nifty. 7 years have gone by that we haven't had earnings growth. So you will probably excuse some degree of skepticism on my part about this 24% forecast which we start every year with.
Okay. Well spoken, and we will ask Hiren his view as well on that. Thank you very much, Udayan. Just a word more from our technical experts before we veer over to more longer-term issues. And longer-term issues should dominate because the market's now rapidly rising. It's 1/3 of a percentage point higher on Nifty and on Sensex, and it's over 0.5% gain on mid-caps as well. Sudarshan, any thoughts now?
Yes, we should be long in the Nifty and the Nifty Bank, and two stocks to buy, Dr. Reddy's and Century Textile.
Fair point.
Mitesh, trading ideas for the day?
Mitesh, can't hear you.
Yeah, hello.
Yeah.
Kotak Bank is looking. Yeah, Kotak Bank is looking very interesting. I think the way it's made a fresh high today, I think it should see follow through for a number of days and weeks to come. By at least 2-3 weeks is what I expect the up move up should extend. So I think I would be a buyer here. Keep a stop just below today's low of 11.18 or so. And 11.70, 11.75 could be a good call. That about, I think Tata Motors still looks interesting. Both the Tata Motors and the DVR stock, I think traders should keep a watch upon. I think next 2-3 weeks, this stock will outperform and clearly give good returns.
Okay, and Ashwini, is there a big call for the day or just going with the index?
I think financials are going to do well again, and if you see PSU banks after having a lukewarm Friday are beginning to pick up. So once we are above this 25,000, I think another 150, 200 on the Bank Nifty are easily possible to take.
Okay, gentlemen, sorry, thank you very much. And of course, we will keep seeking your advice on the hour. Hiren, you tell us now, how are you looking at the earnings, upcoming earnings quarter?
So I think this quarter earnings should be good, because the base still last year was not that great, and we've seen some of the numbers in terms of the auto numbers, the CV numbers, the tractor numbers have been reasonably strong. So I think we should definitely reach, if nothing, early double digits to mid-teen kind of earnings growth for this quarter. But I think it's more than this quarter. What people would want to see is how companies are talking about the next year. And if the monsoons are good this year, which is what SkyMet has made an early indication, then I think we should have finally, and I know everybody is frustrated, Udayan mentioned about the 7th year in a row, but I think finally we should see a 20% plus top number. It's possible. We'll have to see. I think one of the reasons why the aggregate earnings numbers have not been good is because of the accelerated write-offs by the corporate banks and the PSU banks, right? And we've seen some relief there. So hopefully, Ind AS has also been extended by a year. So you could finally see some earnings growth coming in. So the sectors that were contributing to the negative growth could not be as negative as we see. And if some of the NCLT cases get resolved over a period of time, then some of the provisions will get set off against the recoveries or write-backs.
Okay. In fact, talking about that, just see the intraday chart of JP Associates. That stock actually is making highs of the morning. We're talking about that COC meet on that one, and that stock right now is inching higher, about 1% higher is what we have on JP Associates. But Hiren, a word on consumption. That's come back. We had a decent correction in Jan to March period. The first place to bounce back is consumption. You think that just reiterates the fact that that bull market is well and truly intact?
I think consumption is going to be the leading sector in this year. It's very usual. So a couple of things. One is that obviously the impact of the GST and the demon is fading, and that was there in the base last year. Secondly, people do expect typically that in a pre-election year there's a lot of money spent at the bottom of the pyramid, which usually tends to lift consumption at in rural demand, etc. And we are seeing that in the auto numbers, in the two-wheeler numbers. And I think GST has genuinely been positive for some of the urban consumption stocks as well. So I think consumption will be one of the leading sectors. It's also a sector which is typically low beta. So going into an election year which is very noisy or a volatile year, people tend to seek umbrage there, if you may so speak.
But if I could ask a follow-up here on that, where would you perhaps make maximum money this year? Sticking to the toothpaste, to the cookies, to the biscuits, or let's say, some of the so-called sin stocks. In the past, I think you've liked these categories, and they've been great wealth creators, the likes of Delta Corp, or if you're looking at more discretionary consumption plays.
So I think both will do well. Obviously, discretionary will do better in terms of percentage returns, because typically staples are expensive. But having said that, I think at least we are still continue to be very bullish on sin stocks. I think some of the sin stocks.
Which category? Tobacco, liquor?
I think tobacco and liquor are two categories which seem to have a lot of promise. ITC is trading at not only a discount to its own multiples, a discount to the sector multiples. And a lot of the bad news is already in the price. I know I'm not allowed to talk individual stocks, but just as an
Generally
indication.
speaking,
Okay, I want to come back to finance simply because it's, with banks and non-banks, it's like 40% of the sector of the weightage. Would you only go with the corporate banks that we already discussed? Do NBFCs still have space to buy?
I think so. I think the NBFCs were in a secular bull run. But even sectors that are in a secular bull run go through a correction consolidation phase, and the spike in yields early in the year meant that the sector had to go through some consolidation and correction before it could make a new move. I mean, the fact that some of the high quality NBFCs are almost flirting with 52-week highs when the market's still 8% below tells you that, where the growth is and where people are willing to bet first as soon as they're confident about the markets. So I think NBFCs and private banks both do have a great opportunity to take away market share. I mean, that's a secular theme that has been around for a long time. And with the issues that the public sector banks are facing currently, I think that more often than not, I think that's going to be the case going forward. So the well-run NBFCs will have a great run, I think.
The well-run NBFCs are the ones that are priciest. I mean, just looking at historical numbers of Bajaj Finance, 47 times PE and I think 9 times price to book.
No, I understand, but the fact of the matter is that whether you look at well-run private sector banks or NBFCs, I think in banking more than in anything else, I think confidence is so important, quality is so important that eventually people, even if it's expensive, that's where people want to go and put their money because, you don't have those kind of drawdowns that you see in other stocks. And then it takes a lot of time to pull back again and make those returns.
Okay. Just want to pull out a couple of more stocks. I mean, today is really a good day now, and a lot of these stocks which had corrected, Maruti, for example, just see the intraday chart of Maruti. Of course, just be talking about first trades here. It's only ICICI which has dragged the market, but if you see Maruti, and just also pull out the intraday chart of TVS Motor. I mean, these were two stocks which had led that auto rally last year, all through last year. Maruti in the passenger car and TVS Motor in the two-wheeler, and both had corrected quite a bit, but now seeing a bit of a run. We had discussed consumption and autos would be part of this, but NBFCs, you said, are already back to highs. Autos are not. Do you think that would get corrected this year, Maruti, TVS kind of names?
Absolutely. I think these were names which were also a bit, to be fair, overextended in the near term on valuations. But, I think autos is a classical consumer discretionary, sector that you can bet on. It impacts both. I mean, near-term yields going down means, cost of funding goes down for auto financiers, and at the same time, rural demand is strong, which may also mean that it's very, very good for autos.
Here in one word also on the primary market, it's been quite a year. How do you look at the quality of companies and the pricing at which they're coming? Are things still rational, or is there now beginning to, see a bit of a tinge of maybe exuberance?
I think if there's any market which needed a correction, it was the IPO market. I think
welcome correction.
Very, very welcome correction, and I think markets are pretty smart. Anytime. Whether it is, one of the barometers I use is if you look at sector funds, typically sector funds come into being when that sector is almost close to being overpriced. And you saw a flurry of these IPO funds which came out where, people were so desperate to apply to IPOs because they thought that it was an easy gravy train that you can make money on IPOs. And I think the fact that so much money was raised on IPO funds tells you that the sector was about to cool off, right? And that's exactly what has happened. I think promoters have to go back and think that unless you leave something reasonable on the table for the investors, you can't, that window is very short. And just because some people can get through that window and price themselves at a premium doesn't mean. And I think now, you need quality plus reasonable valuations. Only then will your IPO go through. I think gone are those heydays where you get, 100 times and 200 times oversubscription. That's not going to happen according to me.
Okay. Well, a final question. Running out of time, but I'm trying to pack in as much as possible. April 1 is here. The LTCG part is over. So should that be seen as a technical positive? And generally this year, do you think election noise or something like that will keep a roof? What would you call the roof for this market?
So I think, to me, elections have been usually noise. But at the same time, at the end of the day, what will determine whether this market crosses the previous high or not is going to be only the earnings trajectory and to some extent interest rates. I think these two, so it's going to boil, according to me, it's going to boil down to fundamentals. Rest is all going to be noise, frankly. For now, unless we see that earnings, people see 2 quarters of very strong earnings, I think then you can assign some probability that we could probably go and test the highs that we saw early in the year in January, right? But otherwise, I think the markets are in a consolidation phase. And typically, this is a kind of year where you will see that, quality will continue to outperform. And companies which have, governance issues or where business models are not that great will find it very difficult to scale, because the crackdown on black money and stuff like that will continue into this year, right? So you have to steer away from companies that, have any issues or political connections or corporate governance issues. Those won't do well. Okay. And the rest of the pack will pull away. So I think it's more not as much a nifty game this year as much as it is picking the right companies and sectors this year. And you can still make money in a year which may seem very suboptimal or subpar as far as nifty returns are concerned.
Okay. Thank you very much, Hiren Ved, and for the views, providing a kind of a lighthouse as to what direction markets might take, concentrate on quality and ultimately concentrate on earnings. That's the word coming in, which is exactly what we will do. But the other thing that Hiren Ved told us is interest rates. That could be another important determinant of both earnings and markets. And today, of course, we have bond yields now dipping to 7.15, finally registering the good news that foreigners are going to be allowed to buy 59,000 crores. Okay, back to 718. There was a brief moment when it went to 715. But bond yields genuinely away from that 7.80 mark. What does that mean for NBFCs? We have one of them joining us, Dinanath Dubhashi, Managing Director and CEO, L&T Finance, joins us now. Thank you very much, Dinanath, for joining us. There were 2 threats to the NBFC business last year after a heady run, that PSUs are back in competition and bond yields have gone up. Both have gone away. Is life looking very much like 2017 for you?
Good morning to you. Both the things that you mentioned, most definitely positives for NBFC, there is no doubt. But business models are made to last much more than these small things. But let me talk about interest rates specifically, especially the policy and a few days preceding the policy, a few good developments. Number one, the state government borrowings definitely coming much lower, to some extent negated by a much higher state government borrowing figure. But a much lower inflation expectation by RBI, supported by the lower inflation prints. As you rightly said, bond yields have corrected significantly. Where does it take us? Yes, definitely the borrowing cost of NBFCs is much lower than what it was 4 or 5 months back. But on the whole, even though we continue the rally to continue at least in Q1, on the whole, FY19 will still be, funds will be costlier than FY18. No doubt about that. In this case, it really depends on each NBFC, how strong it is, how it manages its ALM, how it manages its balance between variable and fixed, and balance between bank borrowings and market borrowings. So it's going to separate the men from the boys. It's
interesting you say that, Mr. Dubhashi. So for your firm itself, some indication, because you're saying that FY19 overall cost of money is going to be more than last year. How much higher?
Oh, that would be anybody's guess. As you know, bond yields are off by at least 60 basis points from their high in October. But there are still, at least 20-30 basis points above what they were, say, a year back. Also, NBFC spreads had come down drastically. We believe that even if bond yields remain at this level, there would be a chance of corporate spreads and especially NBFC spreads, risk spreads, to harden a little bit from here. Once again, there are different kinds of NBFCs. The better rated ones, a AAA or a AA plus, will definitely fare much, much better than the others.
Okay, give us some indicative numbers. I mean, it's difficult to come to any conclusion on your loan growth, for instance, because all this year you all were battling a low base. So numbers looked very big with 80% and 30%, year on year and stuff like that. What is a normalized AUM growth for FY19?
You're talking about L&T Finance Holdings or NBFC sector?
Both, if you can, but more L&T Finance.
Okay, so L&T Finance Holdings, definitely our loan growth was around 25% last year. The base was not that low. Now we have reached close to 85,000 crores. I don't think we can call it low. Of course, it is low compared to the leading banks, but as NBFCs go, it is pretty high. Let's see on the asset side how situations are. Our wholesale book, anyway, we are controlling it. We are not letting the book grow too much by using sell down. But the housing and agri, the rural growth are actually doing pretty well. The rural market, lots of positives, good rainfall, good expectation of next rainfall, both private as well as government agencies having given good forecast. The speed of sowing has progressed extremely well. One small negative is that the prices are, the mandi prices are below MSPs right now. But most state governments have taken very quick corrective actions on this. Also investing a lot in rural areas through road construction, through MNREGA, much higher investments. And then the proof of the pudding is in eating it. So excellent growth in tractor market, 18%, 15% growth in two-wheeler market, and most importantly, our collections following an extremely good trend as we have completed the year. Okay. So I won't be able to give any numbers right now. That would not be correct. But things have gone pretty well, and that indicates a good growth, definitely.
Okay, just a word on the housing side of your business, which is of course smaller than some of the other segments. Is that going to be a bigger focus area going forward, or I mean, how do you expect the AUM pie to shape up?
Most definitely. So wholesale today, just a year back, wholesale was 62%. We have brought it down to almost 56% now. And it will further come down, as I have been indicating that by the end of next year, it should be around 50%. As far as rural and housing go, they were about 20 and 25% approximately. This will go up by about 2 to 3 percentage points each in the portfolio, just, which sort of indicates a more retailization of the company and the portfolio. So specifically about housing, yes, as you rightly said, our competitive strength or competitive position, if I may, in this, especially in retail housing, is relatively less compared to how strong we are in rural. But we are gaining scale there, and we are very, very positive about the growth next year.
Okay, can you just give a ballpark number? Margins will continue to be around 7%, and NPAs, can they significantly fall from 5.5%?
So margins, as I told you last time, we measure margins plus fees, which is 7%, as you rightly said. And even talking about overall margins and with the interest rate increase, this is what I have been advocating, that one way of NBFCs to fight these cycles is have good fee income. And the margin plus fees, we are quite confident at maintaining at around that 7%. NPAs, obviously, I can't say more, but definitely should trend down, especially in the rural sector. It must trend down, should trend down.